But on a serious note, I want to start with Grant. You say we're in a situation unlike any time in the history of the markets, a race for countries to devalue their currencies in an effort to strengthen their exports, inflate markets, inflate their debt away. And you talk passionately about this, worried that the final outcome of these monetary decisions will end badly. Why don't you explain that a little bit?
Well, how long we got? How long's the panel? I mean, look, yes, I don't think there's any question that we are living in unprecedented times. And, as the debt has built up over the last 30-odd years, we've now reached the tipping point, as you always do in these situations, where it's just unserviceable now. And in order to avoid the painful bankruptcy that would occur, there are several options available, and the easiest one is inflation. That's why you're seeing such a desperate attempt to create inflation. They're failing rather miserably at the moment. And so the natural pressure valve in such a situation is the currency. And so the Japanese have been doing it aggressively with limited success until they really went all in a couple of years ago, and now they're having some success. The Europeans are desperately trying to do it now. But what's interesting is when you look at the yen, and everyone talks about the yen as a sure thing to go to 200, they went from 75 to 110, 115 reasonably smoothly. But what people don't look at, because they generally think of the yen in terms of the dollar and perhaps the euro, when you look across Asia, I live in Singapore, and when you look across Asia, the strains that the weakening yen is putting on the cross currencies in places like Korea, places like Taiwan. And we finally saw the Chinese make a move when they devalued recently. It caused a lot of surprise when it happened, and they've kind of walked it back a little bit. But generally, all these countries need a weak currency, and obviously they can't all have a weak currency except potentially against gold. So yeah, look, I think we are well and truly in a currency war. I mean, the first time it was articulated was by the head of the central bank in Brazil in 2010, and we've come a long, long way since there. The only surprising thing to me at the moment is that people don't see this strength in the dollar as what it is, which is as a fundamental change in the currency regime in the world. I think the dollar's going to go a lot stronger. I think it'll go a lot stronger and then come crashing down again. But I think you need to be ready for a strong dollar environment for the next 6 to 12 months. And that for commodity investors is going to be a painful time.
Let's go to Mike. From what I was reading about all of it, it seems like you're the most bearish on stage, where you're worried, been quoted as saying fiat currencies always fail. Economic manipulation will cause a crash worse than the 1929 Great Depression. Big promoter of gold is going to go much higher. What are your opinions on currency wars, and why are you so fearful?
Well, I actually didn't say all those words, but I agree with you. And I agree with Grant. But the one currency that they can't devalue is gold and silver. So you've got these competitive devaluations against each other to try and boost their exports. That's the reason they're all devaluing their currencies, but they can't print gold. What was the question again? I'm sorry.
Just currency wars, what are you afraid of? Just to get, it seems like you're more fearful of it, where it could really cause many problems for a lot of people.
I think we've seen the top in the stock markets. And as this rolls over, as the economies get worse, the currency wars just have to heat up, because everybody's already doing it. And the one problem with currency wars is no country really can allow another country to win. And so it's a race to the bottom, and the only winner is gold and silver. And I do think it's going to happen. I think for the short term, though, the crisis will probably start overseas, and that the U.S. dollar and U.S. Treasury bonds will be the short-term beneficiary. But ultimately, there will be a violent, Grant just said it, and he said it really well.
well, Jeff, let's go on the opposite side here, because Jeff, you said that basically when we were talking, you don't think there's currency wars going on, do you? I mean, you have a little bit of a different opinion.
Well, yeah. I'm not sure what a currency war is, and I'm not sure that we're seeing one. And I would take exception to a lot of the things that Grant and Mike said, with all due respect. For example, gold can't be devalued, but it's gone from 1,900 to 1,000 or 1,100. So that looks like a devaluation to me. And I think that we're not necessarily in unprecedented times. I mean, and one of the questions I had is, as you talk about this stuff, are you talking about the U.S. economy or are you talking about the global economy? Obviously, the U.S. economy is in much better shape than any other economy in the world, with the possible exception of China, but definitely much more powerful and healthier than Europe and Japan and other industrialized economies. So I'm not quite sure, but if you go back to 1947, the ratio of government debt to U.S. GDP today is about 14% lower than it was in 1947. And I suspect if you go back to 1865 and 1907 and 1880 and 1894, you probably see that these aren't really unprecedented times. We've probably been here over and over again. And one of the things I find most frustrating is, as you look at servicing this debt, we could service it with relatively easily implemented government policies. We just don't have the government will to implement the policies that need to be done. We could actually be turning a government surplus, as we did in the 1990s for 4 years, with very easy policy things. It's just not being done.
So let's get to Grant. I like the smirk when Jeff was talking.
No,
We'll get things heated up.
Yeah, look, the thing that struck me was the comment about the U.S. being a healthy economy.
Relative to you.
Well, yeah, but see, and this is the problem I think we have at the moment. Everything's relative now. If you went back 20 years, Asia was a standout buy. You knew that those economies were going to grow for the next 2 decades. And here we are today talking about the US being relatively strong compared to Europe, which is a complete mess, Japan, which can't get out of its own way, and this government is going to take that country down to the toilets, China, which is in all sorts of problems. Guys that I know that live and work in China and do business up there say it's way worse than the headline figures would be thinking. And so here we are in the US, where we have a relatively healthy economy that can't raise rates from 0 for 7 years. And now we're talking about a 25 basis point rise. And you look at the dislocations that set off when they thought it would happen in August. That's not a healthy economy. That's not the sign of a healthy economy. You have a Federal Reserve who need to raise rates. They shouldn't be raising rates. They need to. And why? Buried in the Fed minutes, which I was really surprised I didn't see anyone talking about, but they actually said that they need to raise rates because if they didn't do it, it would damage their credibility. Now, if you have a central bank in the minutes, and it's in the minutes, I'll find the quote tomorrow and put it in my presentation, but if you have a central bank that's worried about their credibility in the markets, it tells you they've become way too big a factor in the market. So look, I don't think the US economy is healthy. I think it is healthier, but it's not healthy. And I don't want to invest in a healthier economy. I want to invest in a healthy economy. And I just can't see anywhere in the world that I'm really comfortable putting capital to work apart from private businesses that hopefully have access to funding and have decent cash flow. I think equity markets are overvalued. I think government bond markets are ridiculously overvalued. I think gold and silver are the answer. I just don't know when, and I'm baffled as to why that hasn't happened yet. But look, there have been, I've got it in my presentation tomorrow, there's been 30 reasons why gold should have gone up in the last 3 years, and it's done nothing but go down. But unfortunately, that's just where we are in the cycle. Sometimes these things happen. You don't know why they're going to happen. You don't know when things are going to turn around. But ultimately, this is a problem of mathematics. There's too much debt. There's not enough growth. Something has to give. And unfortunately, it's going to be the debt one way or another.
Jeff, you want to respond to that? Because you mentioned the word surplus, which I looked at the faces of some of the people in the audience. Why don't you respond to some of the things that they're saying, since it seems like you're on the opposite side there?
Well, there's a whole lot of stuff to talk about here. And if you want to talk about surplus, first off, understand we've gone from $1.7 trillion deficit to about a $400 trillion deficit. If we stopped our imperialist wars and went back to a pre-Bushian defense posture, and if we went back to the 39.4% marginal tax rate that I think George I and Clinton had, we would have a surplus. If you did a couple other things like find a way to finance the unfunded Medicare payments or pharmaceuticals, which is now about $400 billion a year that Bush passed, you could actually be turning a surplus on the order of $600 to $800 billion a year. and you could start paying down our debt. As we paid down almost $1 trillion in 4 years from, say, 1998 to 2001. And I think people tend to forget that. I think we were talking about currency wars, and one of the problems I have, and these guys hopefully can talk to me about it or explain to me, the fact that the dollar's strong and the euro and the yen are weak is, to me, an outcome of relative economic strength. And yes, it's relative, because actually everything is always relative. The question I guess I have about currency wars, are you talking about the fact that because our economy is stronger and healthier than theirs, their currencies are falling? Or a currency war, the term implies to me that you have governments saying, I must lower my currency rate. And I think that there's a gigantic gap between governments saying lower exchange rates would be good for our economy, and governments saying, let us manage our fiscal and monetary policy in such a way as to drive the rates down. And I think that that's one of the big keys. But the other thing is this, and the single most important thing you can say about currency exchange rates is that the only currency exchange rate that has not collapsed is the current one. You have all these people who will tell you, there's never been a currency system that wasn't backed by gold or silver that collapsed. And that's true. But it's also true that every other currency exchange rate, except for the current one, has collapsed, and most of them were backed by gold and silver. And people bastardize my good friend George Bernard Shaw's comments. He once said, if you had to choose between gold and politicians, I would trust gold, not politicians. But the fact is, politicians have always, at least since Roman times, known how to bastardize gold. So the key takeaway is understand that the current international currency regime will collapse at some point. And central banks around the world have unilaterally and collectively talked about this since the 1980s at least. It's clear that the time of a de facto dollar reserve system will end. And the problem is there's nothing on the immediate horizon. And if you wonder why the Central Bank of China has $3.9 trillion in reserves, and why the Thais and the Philippines and the Japanese and the South Koreans and the Singaporeans and the Hong Kong Monetary Authority all have these massive reserves, most of which are denominated in dollars, is because they want war chests against the volatility that they expect, not over a few years, but over decades, if we're lucky. I wasn't raised a Calvinist, so this whole idea that things can only be resolved by fire, by cataclysmic collapse, is not part of my psyche. And when you talk to central bankers, they say, yes, there are risks about that, but there are, in fact, a lot of tools available for central banks to try to keep us out of global or national depressions and give us the time we need to try to resolve this stuff over decades. And again, remember, the first time I started talking to the People's Bank of China about making the yuan exchange currency convertible was 1981. And I got really excited, and they said, listen, this isn't going to happen in 10 or 20 years. This is a multi-decade process. And that's how central bankers think about it. They say, we have to try to keep this all together.
Same question, Mike? Go ahead.
Well, actually, I'd like to make a couple of comments. First of all, there was no surplus during the Clinton years. That was a smoke and mirrors accounting. If there was a surplus, the national debt would go down. The national debt, no. The national debt went up every year. You need to check that.
You're including all the off-balance options.
I'm including how much we owe, how much we borrowed, how many treasury bonds were sold. The national debt went up in each of those years, and if we had more income than our expenditures, it would have gone down, and we didn't. It was a smoke and mirrors accounting. Second, gold has never failed. Yes, there are currency systems that have failed because they were gold standards, or they were cheating gold somehow, or they debased gold somehow, but gold has never failed. And third, we suffer from, we're stuck in this low level of prosperity because all of these quants that run the system will not get out of the way of the free market. They feel that they've got to steer this thing and try and control it. And all that does is diminish our prosperity. And there's something about prosperity. It is a compounding thing. The transactions that we make tomorrow depend on how many transactions we make today. And so every time they do damage to the system, it's permanent, and it's irrevocable. It cannot be repaired. And these idiots that think they know more than the free market, that try and steer this thing, are causing us tremendous pain, and you don't know it. I mean, we don't have a comparison. We can't. But the free market is what has brought us all prosperity throughout the years. There is no other source. One of the things that has been very entertaining is we were on a panel with Jeff Christian, and he sort of insulted GATA. And then I came back when he was saying that we have to get back to the policies that we had during the Clinton years when we were running surpluses. And if you look at the U.S. Financial statement, they will claim a surplus. Usually it's a deficit, but during those Clinton years, 98 to 2001, they were telling us that, I don't know if you remember the elections then, but we had Al Gore running against Bush, and they were promising us all this free crap because they had taken these supposed surpluses and projected them infinitely out into the future. And what are we going to do with all this excess cash? And but the real budget surplus or deficit is simply the year-over-year change in national debt. So if you look at the U.S. gross national debt, and there were a couple of years here where it was the same, so we didn't have a huge deficit, but there is no year where the national debt did not go up, and I just asked him to try and just Google national debt and look at a chart. Just click on images and look at a chart. And he told me that the definition of a true believer is somebody that will not change their stance in the face of empirical data. And I was asking, and he was basically calling me a true believer, and I'm a true believer in facts.